Hello. I am Peace Love Music, and we are DeOrganized Media. And today we have a first. We are launching a new show with CryptoLandy. Everyone knows Landy. He's a great friend in the space, and he is going to teach us. He's always actually in the spaces on X, helping our community understand technical analysis and the numbers and the charts. And he's going to do this on our medium now on DeOrganized. He's coming on to show us today he's starting with candle structure and trend, and super excited to have him here. Going to bring him on right now. Landy, how are you today, sir?
I'm doing well, my friend. Just over here getting the day started out here on the West Coast and taking a look at the beautiful breakout on Bitcoin. And yeah, like you said, we're gonna talk a little bit about technical analysis for those that are new to it. We're gonna start kind of from the beginning, and that's understanding kind of the chart and the candlesticks. And then we're going to talk a little bit about trend, because this is kind of the first fundamental point of technical analysis that I talk about quite often. And I'm going to tell people right off the bat is that this is going to be tailored to those that are new to technical analysis. We're not going to dive right into the deep end. We're going to start out very slow and steady with understanding exactly what it is that we're looking at. And then we'll work our way through the various domains of knowledge, and make it easy for people to kind of understand what's going on with how to read charts, because I think it's a valuable skill for anyone, even if you're not going to do technical analysis on a regular basis, but just want to understand what's going on with price action.
Absolutely. I mean, and with the way things are nowadays and the access to that people have to this information on a near instant basis, um, it's definitely a great skills, even just conceptually for people to have. Even if they're not going to you're not likely going to be a trader after the first, or even maybe the first 5 episodes, right?
Yeah, probably not. I mean, you might be able to get there at least with TA. Trading is a completely different skill set. Trading is relies on technical analysis. So you do need to understand technical analysis, but trading is a different skill set in that you have to do a lot of personal evaluation. You have to understand your risk. You have to learn how to create a plan based on your technical analysis, and then learn how to effectively execute that without letting emotions get in the way. That is something that we will talk about eventually, but we're going to start with the basics first.
Yeah, awesome. And just a friendly reminder to our audience, we love Lanny's skill is awesome, and he's teaching you some great and valuable knowledge. We are not endorsing any of the products or any of the investment opportunities that Landy's using as examples in this case. Always do your own research and never invest money you cannot afford to lose. But we are absolutely happy to have Landy here, sharing his skill and his knowledge with our community. And thank you, sir.
Well, thank you. I appreciate it. I appreciate you having me on, and I'm looking forward to this. I think this has been a long time coming. I had a lot of requests to teach people kind of how I break things down. So, I'm excited about this. I think this is going to present a good opportunity for those who have been asking a lot of questions to get in here and ask some more while we're live, and then also have some material to go back to periodically that's been recorded. So yeah, I'm excited.
Very cool. Very cool. And just so everyone knows, you are absolutely welcome. And we would love it for you to, if you do have questions about what you're seeing, um, chime in the live chat. If you're watching this not live, obviously you can always DM Landy, DM me if you have questions about these things, and we can. Well, maybe don't DM Landy. He didn't actually offer that up. You can DM me, and I'll get to Landy. I know his DMs are a little full. So, but if you do have questions, definitely chime in the live chat and ask live. We'll be happy to answer them if you do.
Yeah, definitely. We want people to ask questions as needed. Um, while we're live, but also, there's the best way to get your questions answered from me is actually publicly because my DMs get pretty swamped. I'm usually a little bit overloaded in the DM section of X. Now, there is other ways to get in contact with me through various, but that's not something we're going to get into today. That's something maybe for a different day we'll discuss.
Cool. I'm just actually
I'm
sorry.
sharing.
I got so many DMs coming at me, and I was going in to try to share out the stream, and the DMs just catch me every time.
Yep.
It's impossible. It's impossible right now, which is a good sign, though. I mean, it's our space is just growing. So, are you ready for it to bring up the chart? To bring up your
Yeah, well, I'm just spamming chats right now with our stream here, and you can bring it up. We'll get started in just a second here. We can stare at the Bitcoin chart for a moment,
man.
as it is in a nice, beautiful uptrend, and I am very, very excited about what the future holds right now for Bitcoin. And
Did you? I know I heard people talking about like 75, 78, and I mean, it seems to have ripped way past what people were expecting.
Yeah, well, I mean, I was calling for above 73 to 75, looking 75 to 78, 78 to 80, then mid to low 80s. And I'd mentioned just on my Saturday video, like just above the mid to low 80s portion, that I was looking for around 88 to $90,000. There's a major level there. Now, of course, that's not stuff I'm going to get into today, but it's right in the area, and I think we might have hit 90 or just shy of it on spot price here. I can actually go over to the candle here. Yeah, so 89,957. So we almost hit 90. So that was the next big one that I was looking for. And then yesterday's video, I showed kind of some shorter term resistance overhead at like, just shy of $95,000. But once we get into blue sky territory like this, um, it becomes a game of measuring volatility, which is going to be one of our kind of sections that we talk about in terms of TA, and it's one of the ones that I think is most important that people don't take into account, and one of the reasons why many get caught off guard when it comes to doing technical analysis, even guys who are very experienced and gals. And in this case, the volatility monster ate a lot of short positions because people were going short in specific levels and ignoring volatility. Um, and, in some cases, ignoring trend. And that's actually, where we're going to end up starting here. Now, Bitcoin here on the weekly, we can use any coin for this kind of stuff. But one of the big things that we got to understand is kind of what the hell is going on in the first place here. Like, what are these candles and what do they represent? And we're just going to zoom right in to the current weekly candle and just kind of talk about candles and what they represent on the chart here and kind of what the chart represents. We're looking at a weekly candle structure here and the weekly chart. And the chart here is showing us the live auction for Bitcoin. Bitcoin goes 24/7, much like all of crypto. It trades 24/7, round the clock. It's not like traditional markets where we do have close open periods that are very specific, and then we have pre-market and post-market periods. For crypto, which is what we're going to be focused on here for our TA kind of learning, we have a 24/7 market where we're looking at the live auction, which is live sentiment. When you're looking at price charts, you're actually looking at the moment to moment sentiment of that particular ticker or asset or indice or whatever you might want to call it. In this case, we're looking at the moment to moment sentiment for Bitcoin. And this is a live auction. People are buying and selling in all of these areas, and the candlesticks represent that. Often, what you'll find is when you go to open like a lot of different applications that will show you price, you'll often see like a line chart like this. Um, that's helpful to tell you kind of where things are closing and opening. But and it's really realistically showing you the close to close. But we're really what we're looking for is we want to get the most information possible for technical analysis, and that's where I'm actually going to bring this over to a little bit cleaner chart, and this is the Coinbase chart for Bitcoin on the weekly. And there's a few things to point out here that are fairly straightforward with Bitcoin in this regard. When we see a green candle like this, we um, we can get where the open is. Um, the bottom side of the candle is always going to be the open for any kind of a green candle. The top side of a red candle is going to be the open here. And then, we don't have a close here, but wherever Bitcoin is currently trading, like right now, we see Bitcoin is trading at 86,100 or so. That is where, wherever this closes, that's what we're going to see. So we have the open from one day to the next. It's a green candle, so price is rising. While price is kind of active during this particular candle for this weekly, which we have 5 days left. We can see we have 5 days and 8 hours left over there. We're seeing kind of where price is live. We can see the high and then the low of the actual candle. So when looking at the structure of the candle, we have in this case, we have our open. We have what might be the close. We don't know. We have the high and the low. And we can even go to last week's candle to kind of point that out because we have an open down here. We have a close up here because it is a green candle. Price was rising or auctioned up and closed higher than the open. So we get a green candle. We have the low side of the candle, which is the lowest that price even traded in that candle for the weekly. Then we have the high. So we had the open down here at like 68,736. We had the close up here at 80,428. We had a low of 66,783, and we had a high of 81,534. So this is a full weekly candle. This gives us a lot of information. So this told us, at some point during last week's candle, price dipped down to 66,783, and it rose all the way up to 81,534. We had an open from one week to the next that came in a little bit above. So what we know what this candle is telling us is that when the candle opened at some point during the week, it dipped down for some liquidity before rising, and it didn't close. It closed near the high, but didn't close right on it. So we have a little bit of a wick or a shadow there, and closed right around 80,428 with that high coming in about $1,000 higher. So we get a lot of information based on these candles, and there's different candle structures that we can look at that give us a lot of information about what's going on in the market, how the market's kind of feeling. Now, we're not going to get necessarily into that too much, but we'll take a look at a red candle here. We'll take a look at this big boy right here. This was just prior to Bitcoin going down and tagging $49,000. But we have, a candle structure here for a bearish candle. So we have a bullish candle, which is green. We have a bearish candle, which is red. And there's a million ways that you can interpret candles, and I encourage you to go look at them. We're not going to talk too much about them because I'm going to be, as we kind of go through and look at trend, talking about what the candles mean, as there's a lot of extra kind of evaluation that you can do, and there's many different resources for understanding what candles mean. I'm going to be explaining it my way. You can go to Investopedia. They actually, believe it or not, I know a lot of people make fun of them. They actually have a really good candle structure kind of breakdown for what candles mean. But essentially, we have these candles here where we have an open, and then we have a close down here. So when the close is lower than the open, we get a red candle. We had a nice open here where we were trying to break out in terms of trend back here, but we had an open at around 68,244 on this candle, a close down here at 58,130. We had a high of $70,000 and a low of 57,123. Now, what this tells us is that at some point after this candle opened, it tried to move higher, price tried to move higher, and then got rejected and then we ended up closing all the way down here at 58,130 and even auctioned down lower than that at 57,123. Now, what this tells us is that price tried to push higher and had to move lower to actually find buyers. Whereas on this green candle over here, price had to, or price opened on a high and pushed higher after dipping down for some liquidity and had to push higher to find sellers. We're now finding that in our current candle here. So I'm not going to focus too much on candle structure outside of that because I do think that it's important that we get into um, what candle structure actually means as it relates to trend, because trend is what is important. That's going to give us the most information about the market and whether the market is moving higher or lower outside of just one candle, but multiple candles. Peace, did you have any questions about candles?
No, this is all stuff that, I mean, it's obviously relatively beginner stuff. So it really makes, I know that there are different kind of candles too, but I think that that's probably more advanced than where we want to go with this. Like I know like Haikanashi candles are different because they don't show the open to close kind of the same, or
Yeah.
and they're used for different things and stuff like that. But I don't have any specific questions on this because it's stuff
Yeah.
I'm already familiar with.
Yeah, there's Haikanashi, there's Renko, there's line break candles, there's Kagi. There's all kinds of different candles. You don't really need to know about that. What I would say is for candle structure, yeah, I would stick to for most. There's reasons why you would use Haikanashi, and some people do use them. I do not, as I am more interested in seeing the pure close and open of a candle, or open and close, if you will, and the pure high and low, without any math being integrated into it for average pricing, which is what ends up happening with some of those other candles. This is the purest view of price. It's just regular candle structure like this, where red means price opened, and opened at a level and then moved lower to close. That's where you're going to get your red or your bear candles. And then green candles or your bull candles are where price opened at a level and then moved higher and closed at a specific level that was higher than the open. That's where you get your bull candles. And then you have your candles that have that are in between, right? The close open, right? So we have 5 days to go, or 5 days and 8 hours to go for the current weekly candle on Bitcoin. And that's kind of leads us right into trend. And one of the things that I actually am going to kind of show here is that we have very simple stuff. And this is actually where we're going to ignore the price scale over here, because when
So
we have, yeah, go
I
ahead.
have one question. I don't know if it's probably something coming down the line. We're working with weekly candles right now,
Yes.
and I'm assuming you're going to kind of go over why you would use weekly versus daily versus
Yeah.
shorter term candles,
Yeah, and for right now, it's not really as relevant. It doesn't matter which time frame basically that we're working on
because
at this particular moment.
we're just learning what candles are
Yep.
and what the trend and how to read the trends from them and that basic stuff,
Yep.
which is fundamental, by the way. If you don't have that stuff down, the rest doesn't work.
Yeah. Essentially. Yeah. And this is where we can kind of get into a few different things here. When we have a bunch of candles that are moving, that we have are well in aggregate moving down with lower highs and lower lows, we get downtrends, right? So you can think about the candle structure, and like I don't have a clean example chart. I like to use the live chart for this, but we have an uptrend, which is where we have a starting point for price. We have a high, we have a higher low than where price started, and then we have a higher high. So that's your standard uptrend, and then we have our downtrend, which is where we have price starting at a specific area. We have a low, we have a lower high, and then a lower low. And this is very, very simple. This isn't even full trend, but this is something that I did want to just point out because we're going to take a look here just as an example. So we have, you know, we have some trending structure here for Bitcoin. And I'm going to go and actually move out to an even higher term time frame because we can get a cleaner view of the chart on the monthly, for instance. And we can talk a little bit about a downtrend and an uptrend. And what we can do here is we can actually turn on that line chart. And we can see that we have the line chart is the closing trend for Bitcoin or any kind of a charted asset. And that's where we can kind of get an idea of what is going on with price in terms of is it rising or falling on a particular time frame. And this is there's two ways to look at price, and this is something that I want to get out there ahead of time, and that is the swing trend. So the swing high or the wick high, if you will. So when we're looking at candles, we have the body of the candle, which is the open and the close. So for the green candle, the open on the bottom, the close at the top. For the red candle, the open at the top, the close at the bottom here. And then we have the price that was traded at the highs and the lows. Those are called wicks or shadows or swings. There's three ways that you'll hear people kind of refer to this.
Wait,
You'll hear
so
me.
wicks. So when people about swings, they're also talking about wicks.
Yep. So this would be a swing high up here, or a wick high, or a shadow. This would be the candle's shadow, or the shadow, the top shadow of the candle.
Okay.
Um, you'll hear me often refer to this as a swing or a wick. That's the same thing. And this would be the bottom shadow of this candle over here from the prior cycle, where it's the shadow, the wick, or the swing low of that candle. So you have the body of the candle, and then you have the swings. So we have a swing high, we have a swing low, a swing high, and then we have even a swing low, swing high, swing low down here. And one of the things that we'll note is price was getting lower as I was moving my arrow down there. So we have technically a downtrend, and this is the swing trend um, for the prior cycle's bear market. Now, we have a swing trend and we have a closing trend. So in this case, we have a downtrend, which is in this case a full downtrend. So we have a high up here. This was the highest point that Bitcoin had hit at $69,000. We had a higher low, and then we had a lower high, which then initiated a downtrend. And this is where people often need some help. So when we have a starting point like this, where we have a downtrend like this, we have to have a reference or a frame of reference for this downtrend. And that's where we have to, especially with something that is new, we have to understand where the uptrend started. And this is where we can look at the uptrend into this structure that then helps us define the downtrend. So we can go to the prior cycle. We had the downtrending bear market here, which we could get into, but this is a little bit of a shorter chart. But we could take just from the higher low structure right here off of the higher lows on the more macro scale for Bitcoin, and we can then show a little bit of this swing uptrend here. We had a swing downtrend into this area. I know that, and you're going to know how to kind of do that as well. But how do we transition from an uptrend into a downtrend? How do we define that in terms of a swing trend here? You can see that I have the low down here. We have a high where there was a bit of a stopping point here of this particular trend. We have a higher low. We have a higher high, a higher low swing, and then a higher high swing before making, which technically would still be in trend. We saw that we have a higher low swing down here as it relates to this guy over here, and this is where people often get confused because they see like, okay, this is a low. We have this nice uptrend on Bitcoin, for instance, here. So we have this low down here. We've got a nice higher high, higher low, higher high, higher low, higher high. And we're going to talk about these and we're going to label these, but I'm introducing the language to you. And then we have technically a higher low swing But why was this structure dangerous? Why were we looking, for instance, why would Landy be looking for the possibility that this could head down further and test this and break down? And why did this end up with a lower high, lower low, lower high, lower low structure? So why did we go from uptrend to downtrend, and what kind of determined that? Well, as soon as we had the higher low, which technically you could paint as green, but I have it as red, and this is where everybody gets very, very confused when it comes to swing trend, because there is ways in which you can determine whether a swing trend is going to be locked in or not, and that is the closing trend. So this is something that's pretty important, because we have, for instance, our new trend, which was technically bearish even here to here, but it is green now for Bitcoin. So we have this nice swing uptrend, which let's go ahead and actually redo that. So we have we know now that this was an uptrend, right? Hindsight's 2020. We know that this is a nice swing uptrend for Bitcoin, and hindsight's 2020. Technically, um, from the point of view of many, this would still be green. This line here into this higher low. And this would still be red. This first line right here would still be red, because we didn't hit our higher low until this was confirmed here. Now, one of the main reasons why I draw it a little bit differently, and why I want to kind of point this out, and one of the reasons why I wanted to get on here and kind of talk about TA stuff, is because we have the closing trend that many do ignore. And we're going to go ahead and talk about the closing trend real quick here.
So I do have a question though,
Go ahead.
because a higher low usually suggests uptrend.
Typically, you can still get higher lows within a downtrend. They have to complete what's called a trend reversal, and that's where we're going to be talking about trend for a little while. Because what I wanted to show here is the kind of closing trend. So we had that we had what I was just talking about in terms of the swing trend. So we have the closing trend here, and the closing trend matters. So we have this closing trend that is going to be a little bit different, right? And one of the reasons why, for instance, we have the swing uptrend from this prior cycle that looks a little bit different than our now closing trend, which I should put over top here in just a
And
second
just to clarify, the difference is whether you're going from the wicks or from the close.
or from the closes. Yep. So one of the things is this gets a little messy as we kind of go back and forth. But if you look at the closes, there's our swing trend. Here's our closing trend, where we have a closing lower low, closing higher high, closing higher low. And this isn't locked in until this candle right here. So technically, this needs to be over here. We have a closing high once the bear candle hits, and technically that starts right here is when that closing high actually gets in, right? So we have a little adjustments to make. Closing higher low is confirmed right here. And why? Well, that's where we have to look at the actual swing trend again, and the closing trend. So if we go ahead and just take that off as an illustration, we go ahead here, and we're going to just use some really simple tools here. We'll go ahead and we'll turn the green on here. We're going to go ahead and we're going to put some horizontals in these different areas. So we know where the high of that particular trend is. So we have the higher high, the higher low. We then are going to mark this as higher high, higher low, and then we've got this higher high of the swing trend, right? And when we zoom in, it gets a little bit goofy, but we're just taking the swing high and the swing low, and we're marking it. So we have our starting period down here, where we're measuring this from at about 38, 858. We have the high up here at around 12,500. We have the higher low at around 90, 9,800. And then we get up there to the $65,000 high. We get a higher low around 28.8. And then we have our higher high up here at $69,000. So when does this trend actually break down? Because we have this bearish trend that I pointed out right here. What makes this bearish? Because technically, it is a higher low. So this would be green with then a lower high, and then this would be red. Well, one of the reasons why this didn't this swing trend is not what was breaking, what we were watching for the breakdown. We were looking at this candle structure right here, where we put the swing low in to swing high, and we need to understand where the closing trend is. So we picked out kind of where the swing trend is, and we have some areas of interest for that, and we kind of understand what's going on there. If we were to take the closing trend and understand where the closing trend is, we know that it's a little bit different, right? So if we have the closes up here, we have the swing high at 65, we have the closing high at 58, almost $59,000 here. This is where people get goofed up, because you see the high, you see the low, but we also have the close, which matters, because where price closes matters when it comes to auctions. And then we have the higher low at a close with the swing low down there at 28.8. We have the higher low close coming in at $35,000. We have the $69,000 high, and then we have a close open here of 61,350 or so. Then we get down to the swing low here, which is technically a higher low on the swing or the wick or the shadow or whatever you'd like to call it. And then we have the closing low side structure here. But we didn't actually see it close a low. And this is where we go back to kind of candle structure. And we'll talk a little bit about candle structure as it relates to trend, and then we'll continue a trend. But you see that the closing structure here off the low here at 32, almost 33,000. We have the close open here at 38.5. Well, we got a swing high, but we didn't actually complete a closing low. We completed this closing low up here, right here in 1, 2, 3 candles. We completed the closing high up here. I'm sorry, closing high up here, closing high up here, closing low here. So if we get rid of all of these different lines, we can talk about candle structure again for just a minute. And I'm going to just show you the different candles here that put in the high from last cycle. And why does it matter? If you're looking at the 3 candle structure here, we have not only a swing high, but we have a closing high. And that's where we had our bullish candle, our bearish candle, and then we had our third bearish candle. So we have a bullish candle followed by 2 bearish candles. And where we see the bear candle close below the open of the bull candle, that's what puts in the closing high. So we have essentially a 3 candle structure here that is going to put in not just we're just going to go like this for the swing highs to swing low, right? So we're just taking a portion of this trend. And where we're looking for this high to actually be in on a close and not just a swing is when the actual candle, so when we switch from bull candle to bear candles, as soon as we see a close below the open of this last bull candle, which was at $45,000, that locks in the high as a swing at 65. It also locks in the closing high here at our different zones of interest. It was what you'll see me kind of term this as on my charts, but we have the swing high up here, which we'll call this, we'll just make this green for right now, so it's a different color. And the yellows are going to be the closes, right? So we have the actual closing high up here is locked in as soon as we get the close below the open of the green candle here. So we have a warning here at the top, which this is called a doji candle. That we saw the close open kind of come in very close together and the actual April candle here. And then we had from April, the close open in our May candle there. Once it opened, we saw a little bit of a test up. and then it closed down below the green candle or the bull candle here at $45,000. That locks in this swing high at 65 as a high, and it locks in the closing high here at 58.8. And this is often when you see me chart on my videos, you'll see that I paint these as like zones of interest, as an area of resistance overhead, because it's established as an area that price tried to auction through and got rejected. And then once it put in the high on not just a swing, but a close, by closing below this candle here, well, then we knew that that price was likely going to move lower to some other areas of support and resistance, but it was putting in or locking in that high as a valid area of overhead resistance, where we do have confirmed highs on a swing and a close. And this on the other side, we can do the same for this low down here. This didn't occur all at once, because you might be looking at this and saying, well, that high was pretty easy to pick out. It was 3 candles. We had the bullish candle here. We had a bearish candle followed by another bearish candle that closed well below the open of that bullish candle. And then on the other side of that, how do we determine where when this low is locked in on a close? Well, that's where we have this big old red candle. So once we see that, we're looking for the bullish candle. So we have 2 big red candles here, one very large body candle. Then we have another candle with a smaller body and a larger shadow to the bottom, or wick or swing, and a fairly decent shadow or wick or swing to the top side. Well, we're looking for a bullish candle to enter here. We're looking for this bull candle here, which closed right at the high of the prior bear candle. So we have this kind of a downtrending structure, especially in lower term timeframes, where we have the swing downtrend, right? The higher low structure there. Now this is still in green territory, because this was the last higher low was all the way down here. But how do we lock this in and understand when this is confirmed as a closing low? Because we don't really need to see it close back above this open up here. We can actually get a gauge for this on this particular structure in a pretty straightforward manner, because we had the big bear candle. How can we gauge this? Well, we can get rid of this here, and we can say, okay, well, if it closes above the open of the prior candle, technically it's setting a low on a close. You'll see me put in additional criteria, is that if it's bearish, I want to see the high taken out when it's next to a very large candle like this. You'll also see that we'll get, the high called in right here from the other side. So like you'll see a lot of indicators. If you use indicators, we'll throw the high on any close below this swing low from this candle over here to put the high in on a close. You'll see the same thing for the actual close here, where the next close was lower. It will paint the high on a close. I usually go for additional criteria. I'll take the swing low, or in this case, I'll take the swing high. If this is closed above this swing high, the low is set on a close, and it solidifies that swing. And the same goes for the other side. If it's going to be the close open, I like to see it close preferably above or below a certain area. So if we're going to lock in the high here, this high on a close and a swing, I like to see it either below the swing low, or preferably below the open, because the candle was so big here on the other side. To lock in this low, we can actually take the swing high, or we can take the closing high, open. Once that is closed above on this green candle, then the low is in, and we'll see most indicators reflect that as well. And that's where we have to really get down to understand the candle high and low structure as it relates to our trend, because we have trend shifts that occur that goof people up. And I spend a lot of time on trend, by the way, when I teach this, because we have this structure over here. Why was this bearish? Well, this is technically on a close, one giant move down. And why is that on this bearish section? Why would I paint this red when everybody would say this is a swing high higher low and this was the lower high, it should be read from here. And while they're technically correct, I do it a little bit differently because I look at this as the closing structure related to the swing structure. So if you look here, once Bitcoin puts in this, we have the high up here. So we'll do the high up here. We have the higher low right here, right? So when we start to look at this for the high being painted in, as soon as we got the close below, we have the nice bullish candle. We hit around $67,000. We have a higher high than the previous high over here. We see on this bearish candle from November of 2021, we hit $69,000, but it closed down here at 57. So it closed below the open here. So it is a bearish candle. Once we get the close below 53.3 right here and the next candle in December, technically the highs in. I was looking for a further breakdown from here at 43,800, but technically right here the high is in. It locks in that that $69,000 high as the actual high, right? And then the close is then going to be locked in as the closing high up here at around 61,350 when we see the close below this swing low at $54,000. Now this is another nice 3-candle structure. We don't always get nice 3-candle structures. At the time, I wanted to see a close lower than the open of the bull candle, though. That's just for me. That's anecdotal. That's something that I look for. But the high was technically in as soon as we closed below this point here. This is when this entire structure is now painted as a high. So the high was in. What we're looking for is higher lows then. So when this higher low swing comes in, very, very nice, but we didn't see it close above the, we get the 3 bear candles here, and then we see price try to turn around, and you'll notice it never closes above the open of this bear candle here. So when we get the nice bull candles, we don't see it close above this 46,000. We also don't see it close above the swing high here at 45,855. So we never got a closing low. We got a nice higher low swing and lower high swing, but we didn't get a closing higher low set. Price then moved down. So we do need to understand that there is a difference between swing high and swing structure, swing trend and closing trend, because it does matter when it comes to the actual auction, and that price can't move higher or lower. And we can actually take a lot of the swing trends that we look at here as examples for looking at trend. We have a nice uptrend even from the bear market lows. So we had a lower high here. This was our swing structure, right? That we just were pointing out, where we had the downtrending swing structure that I painted as red here. We'll paint this as red again in just a moment. But you know what we're looking at here is where did things turn around? And from the swing structure, we can look and see when things turn around pretty easily. And then it only gets a little bit more difficult when we're looking at trending closing structure. So we have our downtrending structure here. Where do things kind of turn around? Well, this is where we can do something very, very simple. We can go here and we can say this was a higher high. That was our higher high. We have our higher low on a swing, and we're just going to click on random things to make sure that that it doesn't work out the way I want it to. There we go. So when we start getting into swing structure, we can then see where things change. We have the swing structure, trend breaks, and that kind of stuff that we're going to get into probably into the next stream. But we have a bit of a character change here, right? So we have a higher high, we have a higher low as it relates to this guy over here. So this swing low is higher than this, but then we have a lower high as it relates to this higher high up here. So this is where the swing structure was changing. We already had warning that it was going to have trouble. We needed to see it close above 45,855. It didn't do that. And preferably above 46,200. It didn't do that. We ended up getting a bear candle that ended up solidifying this in the next two candles here as a lower high. And we moved down into lower low, lower high structure. So this is where we have pretty straightforward stuff
So it's really the lower high in
that kicks it off.
that sets that trend. You
Yep.
don't really, because the higher low, you don't know exactly what's going to happen, even though it doesn't look great because it's a higher low, but it's only slightly higher.
Yeah. Well, the interesting thing is, so we had a warning once it couldn't solidify this higher low, which is a valid higher low in a swing. We needed to see it close above, the opens of at least the bear candle or the high of the bull candle here, and it never did that. So that was our warning, that when it failed to close above there, because we don't know, once this higher low is in, we have higher high, higher low structure. This is still good, right? As it relates to this trend over here, which was higher high, higher low, higher high, right? And then when we start looking at this structure here, we still have higher high, higher low. We don't know that this is a lower high until this low gets closed below. We also don't know that this is a valid higher low on a close until this gets closed above, and it rejected right there on the candles. Once it closes below, so we essentially have a range where if it closes above this, it's going to set the higher low on a close. For me personally, I always take the open. I want to see the open closed above from the bear candle to set that as a closing higher low. And then we have, okay, when it closes back below here, well, now we have the lower high is set. So we have this structure, 3 candles down, 2 candles up, fails to close higher. We get the lower high that then closes below the actual close open structure here that solidifies this as a closing lower high. So once that occurs, this is your transition point. This is where we're watching things. We're saying, okay, we got to see how things play out over the course of this next few months. So this was between January of 22 until April of 22. We had the confirmation that this was a lower high. This was the start of the bear market, for instance. And then we moved down into lower low, lower high, lower low structure. And that's where we have this transition point. And this is usually what throws everyone, because they don't, well, I didn't know it was going to be a lower high. Well, we knew that it was likely going to be a lower high if it couldn't set this higher low on a closing basis. So it'd be a swing higher low to swing lower high. We have a trend change then. And that's where people often get goofed up when evaluating trend at first. Because look, there's a million different resources for looking at trend, but there's only one Landy and only one Landy's way of looking at trend. And I believe that this is the right way to evaluate trend, because typically we just look at the swing trend and then people get confused. They look at, because they ignore the closing trend, which is something that I like to intro. And then we go through and you do exercises over and over and over again with understanding the actual trend. So, I mean, you can even see pretty easily on the chart here where we have the lower low down here and then we have a higher high swing, right? So now we have a character change on Bitcoin as we move out of the bear market lows into into a possible bull market. So this is where we get a structure change. So we have the higher high, higher low, lower high. That's a warning. That's telling you that you need to look out at this low. You look directly at this low right here. As soon as that's closed below, yes, the close opens down here at 38.5. Once it did that, it solidified this as a lower high, but it's only continuation of trend if we see a close below this last higher low, because then we would have only lower lows, right? So we need to understand that as well. Once we get the lower high, just because it closes it as a lower high in this candle over here, well, we still have to pay attention to the higher low. If price doesn't pass it, it could just go sideways, right? That's where we get trendless structure. But in this case, as soon as it closes below the higher low, we can only have lower lows. and then we know from like when price was down here and started to bounce, well, the last lower highs all the way up here at 48,240, highly unlikely it's going to get there. So we were looking for another lower high, lower low. Once we got this lower high at like $25,000, well, once we see the low being set here, and we have price rising again, as soon as we get a close back above 25,200 or so, we know that we can only get higher highs in our trend. So we did end up with a nice higher high here at 31.8, which by the way was the close open of the bear market. But that's a totally different story. We'll talk about that when we start getting into close open support and resistance stuff. But we have from here, what were we looking for? Once we see a higher high, it doesn't mean anything if we don't put in a higher low above this lower low, right? So what we need to see is a structural change. So we need to see a higher high, and then we start to look for higher lows. But the criteria is it needs to stay above the last lower low to put in a higher low, if that makes sense, right? So we would have to say, okay, we're definitely looking for higher low structure as this occurs. So we got the nice higher high above this last lower high. We have a trend break. So we had a downtrend. Now we have a trend break. And as long as Bitcoin, in this case, at the time, what we were looking for is as long as it was above 15 and a half or this last lower low, we're looking for higher low structure. We got that. That higher low structure came in at $25,000. And then, of course, we went in, made higher highs up here at 73,835. And this is where, we are in a nice uptrend. So we have this beautiful uptrend in place on Bitcoin. Now, this is where I would ask you, Peace, based on what you know, where would this structure change? Where would it become possibly bearish or get a trend break?
So we already have a higher high, right?
We have a higher high, higher low.
Well, we have a higher high, higher low, and we've already passed that previous higher high. So
we don't care about the previous higher high.
Well, we have to set up. We haven't set the next high, right?
Well, I mean, no matter what happens here, we have a higher high, right? So like the current candle structure, no matter what happens, this will be a higher high.
Right. This will be a higher high. And then once we see that set, which will require another red candle.
Yeah, at minimum one. At minimum. Yep.
Right. And then we're looking at this higher low number to
which
see
would be right here.
Yeah. We're looking at that higher low, the swing higher low.
Mm-hmm.
And that will, so if we end up with a close below that, or if we set even if we send a higher low, the next higher low, we might, so it would depend on what the next low is, I guess, right?
It would depend on where the high comes in, right? So wherever the high comes in, it's really, really simple, right? Wherever the high comes in, whether it's here, higher, doesn't matter. Wherever the high comes in, we look directly to the last higher low. That is where we need to pay attention, right? Because the last higher low is going to determine our trend because we have higher highs, right? We're above this last higher high at 73,835. Doesn't matter if it closes above here or not. We are going to have a swing higher high no matter what. So we need to pay attention to whenever we see a high put in, which is not going to occur on a green candle. It might occur in lower term timeframes, but what we need to do then is look directly at the last higher low. And the last higher low is at $49,000 on the monthly here. So this is a nice bullish uptrend, higher high, higher low, higher high, higher low, higher high. And then wherever this puts in a high, here or higher, we look directly to that higher low structure at $49,000. Because only if we saw closes below there or we saw a swing below there would we have any kind of lower low structure. And that's when we start to look for trend shifts. And we don't have that right now. Additional criteria would be understanding the actual close open structure. So we have a closing high here that wasn't put in until all the way at this low candle, by the way, that closed below all of these opens. This was the closing high put in up here at 71,300. as it relates to the swing high there. So we have some interesting stuff to pay attention to, right? Because this is a historically important area. We have the swing high or wick high there at the 73,835, right? And this is where we're starting to get into understanding a little bit about horizontal support and resistance as it relates to our trend. But then we have the closing low, which was set on this candle here in October, because we had the red candle that actually set the high over here that closed below all of the close opens here to set this as a closing high and closing swing, or wick high. And then we turned around and we went right back up in these next two candles once it closed above the actual high or the close open here. We saw this low set at $49,000 on a closing low, or I'm sorry, on a swing low, and then the closing low at 58,900, almost $59,000. So we have essentially this. We'll just make this red. It's not bearish. It is a higher low still, but just so that we understand what we're looking at. So now this is locked in, right? So this area on a close at 59 down to 49, we have the closing higher low. We have the swing higher low. We have the closing higher high and the swing higher high. Now, these are big areas of support and resistance on the chart. If we were to see closes back below $59,000, that wouldn't look good. That would tell us that we're going to probably go test the higher low trend here of the swing trend. But the closing higher low structure is pretty tight here between 71,300 and our $59,000. Now I say pretty tight, but this is basically a $20,000 range, or a $10,000, $11,000 range. When we're looking at 49 to 71, then we're looking at like a $20,000 to $30,000 range, depending on your time frame and trend.
So if we test back and close below 59, it's likely we might test back to that 49 swing
Yep.
low.
Yeah, that's based on how the auction would look. I mean, if we were to turn around in this, let's say November candle and start closing back below here, that would look really bad, right? That would still be a high, but it'd be a very rejective candle. We've got a, $17,000 candle. If it was going to, dump down, 30 grand, 40 grand, then we're looking at price probably heading down further, right? Auctioning lower. But in terms of trending structure, without even understanding any of the horizontal close open trend here, we know that this is a very bullish structure, right? And it's not going to change in terms of its bullishness until we were to see closes back below the last higher low. I'm not looking for that, to be quite honest, right? Like, I'm looking for price to get continuation. And this is where we can start looking at, in the future, support and resistance stuff. Like, we're above the prior cycle higher high. We're in higher low structure. We have a full and complete trend, higher high, higher low, higher high, higher low. We're looking for this to get continuation. And that's where we start getting into stuff that is not really trend related. It's more support and resistance, volatility, other metrics like Fibonacci levels of interest and stuff like that. It's outside of the scope of today. But one of the things that I wanted to kind of also kind of point out here is we often get a lot of different patterns. So we'll get, I'm gonna have to paint this green, but we get well, that's just ugly because my mouse decided to change speeds. But we'll get trend reversal setups, right? So I have this over here. This is a trend reversal setup in most cases. If you're coming off of, doesn't matter what the trend to the left is, we have higher high, higher low structure. We're looking for higher high structure, right? So anytime we see something like this, whether this was a lower high, whether this was, coming off of a low and this is a lower high, this is a higher low, wherever we see a higher low, we look to the next big structure. So I like to kind of point out that we can get various patterns, right? So let's say this was a big downtrend coming into this, right? And we have our whole goal here is to identify, the different structures. So we have we'll call this was a higher high, right? We have our higher low. We'll say it's a higher low. We don't know what's come before it.
And real quick, I
Um,
just want to let we do have our guests for our next show kind of lining up in the
Go
back
ahead.
room. So they're watching us right now. So I just want to say hi. I'm aware you guys are there. And thank you for hanging out, and we'll be with you guys shortly.
Yep. I'm going to wrap this up here in a second anyway. And realistically, what we're looking for is, these transition points in trend. So we have a lot of things that we can look at with trend. When you're looking at swing trend, and this is where you should typically start, and then you go and you dive deeper to understand where the closing trend is. And that's where we'll continue this conversation next time with a bit of understanding a little bit more about candle structure, which is why I didn't focus on it a lot, mainly because we're going to be continuing to talk about candle structure as we talk about trend. So this is lowercase, but we've got higher high, higher low, lower high, lower low. We got another lower high and a lower low. And then what we're looking for is, we've got, a lower high here. We're looking for things to try to turn around. So this could even still be a red structure here, or a red line, if you will. And we could say, we could paint this guy red because it's a lower low, lower high if we want. We'd have to be evaluating our actual closing structure here. But this is your transition point where we go to lower high to higher low. This is known as a trend reversal setup. And this is where once we get a higher low in our swing trend, we can start looking to the very last, lower high for that trend reversal. So this would be the criteria to break this big old downtrend here. So we end up with this area to mark, and we end up with this area down here at the higher low, because this is going to be our criteria, right? Whenever you have a transition in the structure of price, when you're coming from a downtrend, or you could just reverse this could be an uptrend, right? But as soon as we get like the lower high and move into higher low, once we have the higher low in, if we pass the higher low, well, it's going to be, we're looking to the next lower low and for continuation in our downtrend. But if we start passing and closing above our lower high, well, we can only have higher highs. This is a trend reversal setup. And then we start looking for our trend confirmation, which would be another higher low and higher high. And that's where we start looking for what I had been talking about for Bitcoin for quite some time, which was that reversal setup on the weekly, which is kind of where we started. And that's where we had this weekly structure that I'm just going to finish up with here. And we'll talk about this for just a second, and then we'll wrap this up. Apparently I have, yes, not clicked the right one. This is where we had a nice swing downtrend. So we had a nice higher low structure still back here for Bitcoin, higher low, higher high. And then we started to get into higher low, lower high. So we now have from here to here, we have a bit of a shift in trend. And this is where on Bitcoin, you heard me turn a little bit bearish on price until things turned around, because we had lower high, lower low, lower high, lower low, lower high, lower low. And we even continued this trend for a little bit until we had a trend break here with a higher low over here. And once we got higher high structure, we immediately started to take off. And that's where understanding trend and kind of how things work is very, very important. Now, we'll get into support and resistance and kind of evaluating this closing structure and the kind of the meat of what I talk about all the time. And one of the reasons why my analysis tends to be pretty darn accurate is because we start with this swing structure where we have this uptrending swing structure. We then see a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then we get our higher high, higher low structure. We have a whole lot of criteria in there that we can identify in terms of where that closing structure came in. Where was the closing lower high? Where was the closing higher lows or lower lows? And then where do things start to turn around? And we'll evaluate that in the next video. And we'll even touch on some of the questions here as I am just going off the top of my head with a lot of this. So I do appreciate you hosting me today, and we'll refine this as we continue to go forward. We didn't get a lot of questions here, but
we didn't get a lot of questions here, but it's the first show, and I don't think we didn't have any marketing ahead of it. We did get a lot of people tuned in. We had over 200. We're over 250 live viewers throughout the show, which is great. And the content's been great. I'm definitely have learned a lot. So thank you so much, even if it's just a personal tutorial live for everyone to watch. It definitely is. I understand a lot better than some basic stuff here. So thank you so much, Landy. This was great. If you guys didn't get a chance to watch it, I strongly recommend catching up and following it. The good news is, even though it's a live broadcast, these are available on YouTube, on X. You can go back and watch them down the line. And we can even chop up bits and create smaller short form content to get some of these concepts itemized. So this has been great. And I appreciate everyone that's, bearing with us, as this is brand new for us. I think it went extremely well. I think the format presented everything in a very clear and concise way. That was awesome, Landy. I'm very much looking forward to next week's episode, so I can understand support and resistance a little bit better. And Code Sater is actually worried that he missed it, and that's okay, man. Like I said, this is available. This is actually available on recording. You can watch this anytime. That's part of the beauty of doing it in this format, is that it's available for people after the fact. And next time, come on. If you have questions, definitely watch along with us. This will be every Tuesday at 11 a.m. Eastern. That's 8 a.m. Pacific, where our host is located. And we'll be back shortly. We actually have another show coming up live in a few minutes. I just got to get set up for that. I have all the guys waiting backstage for the Syndicate's AI show that's going to be launching as soon as I wrap this up and get into the next show. But Landy, thank you so much for this, man. Any final words you have?
No, not too much outside of, I know that some of this, when we first started, might have been a little bit confusing. If you go back to watch it, you might get a little confused. Like, he's talking about swing trend and then closing trend and how they're different. And now there's lines over lines. Stick with it until the end, because you can see that I'm wrapping the concept up by the end. And as we move into the next video or stream, what you'll end up understanding is how we define support and resistance based off of trend. And that means that we're going to continue to expand on this concept of trend. We're going to continue to talk about trend. And then as it relates to the swing trend and closing trend, and then how we can use the swing trend and closing trend to define areas of interest in terms of horizontal support and resistance. And this is the core to technical analysis, because this is how we can define everything else. There's 4 key pillars to technical analysis, and that's trend, support and resistance, volatility, and momentum. Those are the 4 keys to understanding technical analysis and being successful. And the first 3 trend, support and resistance, and volatility create momentum, which is the fourth. And we're then, by the end of all of this, we'll be wrapping this up with how do you get confluences across all of them to make informed decisions about the direction that price is likely to head. And we'll talk about conditions and how you set conditions and that kind of stuff. So, been a lot of fun. Thank you so much. Peace. Thank you for everyone for joining us. And I'll catch you next week. I'm going to stick around actually for your next show here. I'm interested in what's going on. So
You want to join the panel? I'm
sure,
sure Michael doesn't mind. I'm
sure.
sure.
Yeah. If you guys will have me, I'm more than happy to hang out.
Yeah, you're in. You're in. So we're gonna end the show here, and we'll be right back at you in a few minutes. And Landy, just hang out. You'll be in the studio. You're already in.
All right. Cool. Take care, everyone.
All right. Thank you all. This has been a great episode. Thank you, Landy, so much for all of it. It's been great. And I am Peace Love Music. This is the first episode of Learn TA with Landy. Learned a lot about candles and trend. And stay tuned. We'll be back shortly. And thank you all for tuning in and watching.